In recent months, Blackstone got a lot of negative press and it hurt the market sentiment of its stock. The hot story that all media outlets like to talk about was Blackstone limiting the redemptions of its non-listed REIT called B-REIT. I'll put a few headlines here on the screen that you could see in the media a few weeks ago, and clearly they all portrayed Blackstone as a company that's going through some very severe challenges, and not surprisingly it hurt the sentiment of the company and caused its share price to drop quite significantly. But here's the reality that the media didn't care to talk about. Blackstone just released its earnings report, and the company managed to raise another 40+ billion in the last quarter alone and over 220 billion in 2022. And that's massive, even for a company of the size of Blackstone. Their total assets under management reached nearly 1 trillion, up 11% in 2022. So that's clearly not the performance of an asset management firm that's struggling. Their fee income keeps on growing, excluding the performance fees. And on the contrary, you have a lot of other asset management companies like BlackRock that saw their fee income drop quite significantly last year. And the story gets even better here. Blackstone today has nearly 200 billion of cash still on hand that's waiting to be invested. This is capital that's already committed by investors, but they still haven't found the opportunity, so it hasn't been put to work and it doesn't earn fee income to them yet. This essentially means that they have this bank of growth that's already there and secured for the future. And so what about B-REIT? Should you be concerned about it if you're an investor in Blackstone? I think that the fears here have been mostly overblown. Clearly the company is still able to grow quite significantly even despite these challenges with B-REIT. I think that it's going to remain a headwind in the near future because clearly there are still some redemptions on the way, and I don't think that this is going to change immediately. It's going to take at least a few quarters for things to stabilize. And I actually think that the headwind created by B-REIT probably won't even last for that much longer. If you listen to the recent conference call of Blackstone, you'll see quite clearly that the management is very bullish on this vehicle. It's mainly invested in rental housing and industrial warehouses, which today keep performing really well. The rents are growing rapidly, in large part because their current rents are still below market, and so you have good margin of safety there even if we go into recession, and they think that as leases expire they can keep bumping the rent quite significantly. They have also already readjusted the cap rate assumptions that they use in their valuation for the REIT, and I think it's a pretty attractive vehicle. To be fully transparent, I probably wouldn't invest in it myself. I think that publicly listed REITs are today even more heavily discounted and more attractive. I've done another video on this. You can click the link in the description. But I think it's still relatively attractive, and this should ease up some of the concerns that investors might have. And then on top of that, Blackstone just recently managed to secure a big investment of 4.5 billion from a major institution into B-REIT. And to secure this investment, what Blackstone did is they created a joint venture in which they will put 1 billion of their own capital as well as the investment of this institutional investor, and unless they can reach an 11.25% annual total return with B-REIT, Blackstone will itself have to subsidize the return of this institutional investor. And so I think this is a pretty strong vote of confidence that they're gonna keep producing attractive total returns for the shareholders of B-REIT, because otherwise they wouldn't have structured this type of deal. And so to conclude, is Blackstone a buy today? I think it is, because last year we saw its share price collapse, even as the company's fundamentals remained quite strong and its cash flow even kept on growing. Today the company still has this bank of growth, as I like to call it, with this nearly 200 billion of cash that still waiting to be invested and still not generating fees for the company. And so its valuation is historically cheap. It still has quite a predictable path to growth, and the company is now buying back stock. In 2022 they bought back nearly 4 million shares. They have another billion left on their share buyback authorization. The company also has an A+ rated balance sheet with a lot of cash of their own, and so I think the company is very well positioned to take advantage of whatever opportunities emerge in the coming years. And so I'm bullish on Blackstone, but despite that I don't actually own a position today. But this is only because I'm even more bullish on a few of its peers. Two of them are KKR and the other one is Patria investment, ticker symbol PAX. I plan to make videos on these two companies in the near future as well, so Please make sure to subscribe to this channel. If you could also like this video, it will help me a lot. I just recently created this channel. And let me know your thoughts in the comment section below. See you at my next video. Bye bye.